Welcome, everyone. Special live edition of the Making Sense podcast, where we're going to run through exactly what you need to know. It is the ultimate first home buyer's guide. Now, if this is your first time here, I'm Frances Cook. I'm a financial journalist and fellow financial freedom seeker, and I am so excited to introduce my two guests today. Two people who really know this world inside and out. They're brilliant, and so we are going to lay it all out for you. First up, Claire Williamson. Give them a wave, Claire. She's
Hi.
from My Mortgage, and she's the Regional Mortgage Advisor of the Year at the 2024 Mortgage Awards. So she knows her stuff, and she specializes in first home buyers. Also an all-around good egg. So welcome, Claire. And of
Thank you.
course, for everyone who has listened to the podcast before, you already know Vanessa Williams from realestate.co.nz. She is our data queen. She loves to break down exactly what's happened, what it means for you. So welcome, Vanessa. I am so excited to have you both here. Now, super quick, this is the legal bit. We've got to do the disclaimer before we get into it. Don't forget, of course, we don't know your full financial situation. So everything we're talking about here is general information. It is how things work for most people in most situations. Yours might be different. So if you hear something and you think, I'm not sure if that applies to me, trust your gut. You know your own life better than we do. And if you want individual financial advice, it's always best to talk to a financial advisor. That said, we are, of course, live. We do want to make the most of this time together. So drop your questions into the comment section. We will do our best to answer them for you. As in the disclaimer, it will be general information, but we want to make sure that we're addressing the areas that are most on your mind. And as just a little bit of a bonus for those who do want to comment and get amongst, Claire has actually written a book that helps people with that first home buying journey because she is a chronic overachiever. So we have 3 copies of her book that she is willing to give away, and it will go to the people who are giving us good questions, leaving good comments. So jump into that live chat space, make your thoughts heard, and you could be one of the 3 people who walk away with a book. All right, we are going to rip into it really soon. This is the last little bit from me. Don't forget to hit subscribe wherever you're listening so that you never miss a trick with your money. Knowledge is power, and do send this episode to a first home buying friend so that we can all do a little better together. All right, that's it. That's all our T's and C's. I love it. We've got people tuning in from Auckland, from Wellington, from Christchurch, Tauranga, more Auckland, more Hamilton. Brilliant. We've got some great people tuning in from all over the country. So I love it. All right, Claire, interest rates, they're going down. The market has been a bit flatter on prices. How hard is it right now for average first home buyers? You're talking to people all the time. What are people saying to you?
Hi, thank you so much for having me. So I actually think, I'm eternally positive. So I'm always excited about anyone getting into their first home, but I actually think it's a really good time to buy. There is quite a bit of stock out there at the moment. Obviously, Vanessa will cover a little bit of that later on. But from my perspective, is for people who are prepared, people who are pre-approved, who come to us, get some advice, work out what they can afford. Like we're actually seeing a really good, nice, pretty chilled kind of situation going on, which is great. We're also seeing interest rates drop, as you've said, and that's already starting to filter through into what we call serviceability, which is essentially how much you can borrow with relating to your income. And that is really helping a lot of our first home buyers who maybe just weren't quite there 6 months ago. That's really, really helping them to get a pre-approval or to get into the type of property that they want. It's really cool now to see quite a lot of our interest rates now dropping below 5%. So you can now start to lock in even for a little bit longer at that rate, which is quite good. So I think people are starting to get a little bit more excited about paying their mortgage. I mean, no one's ever that excited about it, but getting a little bit more excited about stepping in and kind of making it all happen. So yeah, I actually don't think it's super hard at the moment. Remember that I always have, a certain part of the market. So down here in the Waikato, maybe prices might be a little bit more affordable than they are in other parts of the country. But to be honest, I think it's really important to look at where you're at, what your situation is, and we'll talk about that a bit later on. But I think having that personalized advice is really key. So understanding what is your income, what is your debt level, what is your deposit, and how does that all fit together? Because actually it's almost like a bit of a matrix. So yeah, that's probably my overview at the moment. Yeah, as always, super excited about it for anyone who wants to get into it.
I think it's really true that I have had so many people say that they are really struggling and having a tough time, and then they go and talk to someone, they get that personalized advice. It does change things, and we're going to come back to that because I think it's a key point. But Vanessa, I'd love to get your sort of overview as well, because we've got the interest rates going down. The latest OCR announcement last week, it went down just a little smidge. That was pretty much as expected. There is the prediction that interest rates could fall a little bit more towards the end of the year. Could this impact house prices? What are we thinking on that front?
Yeah, great question. And hello to everybody out there. Thank you for having me back again. Look, it's been a wild ride in the property market. And by that, I mean it's been very stable. Now, look, I will echo exactly what Claire said, is that it's actually a wonderful time to buy because the market is stable and it is subdued. It means that you have a lot more time to do your due diligence, to check out what's going on in the property market, to understand your financial ability. And I personally think that that's a wonderful time to be operating in. As someone who has purchased a home in one of the craziest markets, which I don't recommend doing, even property experts get it wrong sometimes, and I know I've said that one before. But look, it's a really stabilized market. Now, as Claire was saying, those interest rates have dropped. And to your point, Francis, by a smidge, I was like, oh, come on, 0.5. But hey, we'll settle for 0.25 at the moment. But what that means is it starts to stimulate demand within the property sector. And why that is important is because not only have we had a suppressed demand because the interest rates have been high, we've also had a heck of a lot of stock, or a lot of houses that are for sale on the market. And when demand is down and supply is high, usually prices drop, but we've really seen them be stable now for about 2.5 years. So came off the high of COVID, dropped back down to a more normalized level, around, looking nationally, around that $850,000 mark. And so that has remained pretty stable now for 1.5 years. What I do sort of think will happen now that we're starting to see those interest rates drop, and again, as Claire had said, that's more serviceability on that mortgage, it means that it is going to open up a bit more demand for us. Now, we will also, before we'll see prices change, what we need to see is some of that supply drop through a bit more, or those houses that are for sale sell through.
Yeah, I mean, if you had to pick it one way or the other, overall for first home buyers, is it a good or bad time right now?
I mean, what I would always say, and I say this to anybody who wants to chat about property, is that ignore the market if you are looking to buy. Because the reality of it is, if the best time to plant a tree is 10 years ago, the second best time is today. And the same advice goes for housing. It's like, now look, I'm not saying you shouldn't understand the market and get all that knowledge and that information and that power. I totally agree with all of that. But don't let that make the difference of whether you choose to do it or not, because we will never know when the top is. We will never know when the bottom is. We will only know retrospectively. Now, in saying that, because we all are here and want to know what's happening in the market, right? I'm just going to leave you hanging. Look, it's been a really strong month in May. When we left April behind, so the end of April, we had around 36,000 homes for buyers to peruse right across the Motu. Coming out the end of May, so about 30 days later, that's dropped to around 34,500. So we have seen some of that supply getting eaten up, which is actually what we need. We do need some of that stock sell through. So I would suggest that we're probably we will continue to see a bit of that come through over winter as those interest rates, we believe, continue to drop.
And there are differences around different parts of the country, right? What are we seeing there?
And again, super fascinating. And we were talking about this off air before. So interesting how every little region has their own little microcosm and microclimate. So look, if wherever you're buying, I totally suggest, while we talk quite a lot about national numbers, really take a look at what's happening within your region, because it can be quite different. What I would say at the moment is that we have got regional New Zealand that's really kind of kicked off first. We see some of the likes of Hawke's Bay, Manawatu, Wanganui, Central North Island, right down to Southland even. Those regions have really started to see a shift, or should we say a rumbling of those prices start to move. Whereas we have got a couple of the major centres, so Auckland and Canterbury, they're actually still backwards year on year and month on month with prices. But just to throw a wild card in the mix of everything, Wellington might be getting a bit windy because crazily, Wellington's new listings were backwards over 30% in May when we compare it to May 2024. And what does that mean? Prices. If there's less choice for buyers, prices are probably going to move. And we've actually seen an over 12% increase in the average asking price in Wellington. That's around $95,000 that houses have moved in a 12-month period. So yeah, it's a pretty mixed bag out there around the country, but I totally recommend all of our listeners go and check out what's happening in your region. It's super fascinating.
It is. That's absolutely not what I would have expected from Wellington. So that's really interesting to me that that's what's happening. Claire, I'm just going to pick up on this question from Olivia because I love it. Olivia says, I'm curious about whether you have recommendations of where to begin with house buying when you've only just decided you want one. For example, how do I decide how much I should save for a deposit? So if you're talking to someone and maybe they've come to you and they've said, hey, look, I'm not buying yet, but I would like to. This is a big life goal for me. Claire, where do you tell people to start?
I had 2 of these conversations this morning, so it's very fresh in my mind. It depends a little bit like how long along your career you are. So like, for example, if you're working, say, and you've got a little bit of KiwiSaver, it's going to depend a little bit on 1, how much deposit you've got, 2, how much you're earning, and 3, whether or not basically you're paying anything off if you've got any debt. But from a starting point, I always just recommend you get in touch with an advisor and figure out where you're at today, because if there is something that you can do to take some action, say within the next 6 months or even the next 12 months to build up your deposit, etc., that's going to make a huge difference for you. It's probably going to make that process go a little bit faster. I think probably the big one is deposit, which we probably will cover a little bit. But let's say, for example, you have been in KiwiSaver for 3 years or more and you do have a reasonable amount. That's kind of a big starting point, because obviously it does take a little while to build up that deposit. So if you do have that, you are working, and you're kind of relatively low in terms of debt levels, then figure out where you're at the moment by having a chat with someone. So we do this all the time. We call it like pulling levers. So every single person will have some sort of action that they can take to improve their position. So it might be increasing their deposit, but it also might be increasing income, or it might be decreasing debt, or it could be some very small tweaks to things like expenses depending on the situation. So figure out where you're at today. We can help with that obviously, but any great advisor will be able to figure that out. And then you can kind of go through that process of being able to set your budget and work through things like improving your deposit or income, etc., etc. So that would be my starting point. Otherwise, get into just having a look at, like, my book's a good starting point, but there's a whole lot of resources out there that help that kind of start of that process. So yeah, figure out where you're at today is my advice in a nutshell.
Yeah, absolutely. And I just want to say as well, Caitlin in the comments says, we've just started to go to open homes. I've noticed I'm super overwhelmed with, am I asking the best questions? I think that's really common, Caitlin. It is an overwhelming process. What are some questions we should always ask? Well, actually, I'm going to send you back in time to a couple of conversations I've had with Vanessa before, because Vanessa has laid this out for us. There is an episode of the Making Sense podcast called Avoid These Home Buying Mistakes. And that is where Vanessa lays out some really good stuff on that. That was about a month ago, that one. And we've actually got another one dropping. I believe it's this week. I need to double check my calendar. I get overwhelmed with what we put out. But I'm pretty sure it's this week. We've got another one coming out where Vanessa is putting out great stuff on that. So have a little listen to those episodes, because we're diving into specifically those issues. Another thing I think, Claire, with the high house prices that we've seen, right? I mean, I think it can be quite discouraging, quite overwhelming. But it's what we said, right at the beginning of this chat, that I often talk to people who say, I thought I had no show of this happening. I thought I was totally locked out. And then I went and I had a chat to my bank or to a mortgage advisor, and I got some advice. And actually, within 6 months, I managed to make it happen. And this isn't just a one-off. This isn't people getting mummy and daddy money. This is more than one conversation. This is several conversations I've had along these lines. People got some advice and they realized they were actually quite close. What do you see on that front, where people are closer than they think? What can make a difference that people might underestimate?
Yeah, so I think this is a really, really common one. And just to give some perspective, I think that probably only about 5 to 10% of people we actually talk to can't do anything. It's really key from my perspective, from the rest of our team's perspective, is to make sure that you have kind of a starting point. So often people come to me and they say, okay, cool, I want to buy for $800,000. And I go, cool. Hey, look, that's a little bit further away, but you can buy for 725. And all of a sudden they go, cool, yeah, absolutely, that's totally possible. So I think it's really key to understand what are the particular things that can change things, and just to understand that there's actually not that many people out there, particularly ones that I talk to, who are unable to do anything, and they're always going to walk away with an understanding of what actions that they need to take to get themselves into a position to be where they want to be. So we are really big on that, because I just think it's really stink if you walk away going, oh no, they said no. It's like, no, that's not the end of the conversation.
Yeah.
That's hey, look, can't get quite here right now, but actually we could do this. And the amount of times too where I give someone a certain thing, so you need to find $10,000 deposit, and they go, cool, here's my savings plan, awesome, we're going to do that in 6 months and 12 months. And that's actually just a really cool action point then. So I think actions that people can actually take are really important. Yeah, and the other thing I think is you're often going in blind, because if you don't understand bank policy and you don't do it very often, and lots of people only buy maybe once every 5 years, and if you haven't done it before at all, it's very confusing. It's really key to understand what are the particular actions for you. And so we can kind of go, hey, for you, it's increasing deposit, or for John over here, it's actually paying off his credit card. And lots of people come with ideas from others that actually aren't quite the right fit for them. So I think it's really important to talk to an advisor or to your bank about what actions you can take to really improve that position. But yeah, just I'll say it here, there are very few people who can't do anything at all. So I think really important to know that, and kind of walk in with a little bit of confidence in knowing that.
And what about myths? Because there are a lot of myths. I mean, for one thing, the rules change all the time. So you can sometimes have these myths that they were true at one point, but they're not anymore. Or other times they're just myths of things that aren't true at all, never were, but people can let them hold them back because they don't look into it any further. They just write it off. So are there common myths that we want to bust right now, Claire?
Absolutely. So there's two big ones. The first one is I need to have 20% deposit. So that's the classic, hey, there's less funding out there for people with a lower deposit, but there's so many options as well. So every bank does have a certain amount of lending that they can do in that space, and it is available. So it's really important to understand that that is out there. The first home loan, which I think we'll talk about shortly, that's another way to get in with less than a 20% deposit. And all banks do have the ability to do it under certain conditions as well. So again, really important to talk to someone who has all the options, because your bank might particularly be one that isn't active in that space at the moment, because that changes a lot. So the 20% deposit thing is key to understand that, yeah, you could definitely be in a position even if you're not quite there yet. The second biggest myth, I think every second person I speak to goes, oh, no, I can't do anything right now because my bank statements look terrible. And this is much less of a thing than it ever was, guys. So obviously the triple CFA made a huge difference to the way that some banks, or the way that banks looked at applications and expenses. and they went pretty hard on that for quite a while, but that has really kind of quietened off quite a bit now. What we do at this stage is we actually look at what people are spending on certain things. And if we think there needs to be some changes, maybe we just have that conversation. So it's not like, oh my God, you can't buy coffee. And my big thing is you can still have your smashed avocado and buy your first home. But I think like that's really important. You don't have to go and wait for 3 months to hope that your bank statements get better. It's always best to have the conversation up front. And again, then you know exactly what you need to do. So it's about knowledge is power, I suppose, in that respect. Understanding, well, hey, these are the small changes you need to make, or actually, look, let's just relook at your budget and figure out what things maybe you might be comfortable to pull back on. So I know for us, when I bought my first home, we just kind of stopped going out for takeaways and food and stuff. And it's quite an easy one because it's not like you don't eat, you still go and buy your food from the grocery shop, but it's a little bit less expensive. So that was a classic one for me, and I see that a lot. And then other ones are things like subscriptions and stuff like that. So, reviewing those and making sure that, you've got only the things that you need. That's really important. Other myths are that if you've got any debt at all, the bank will say no. That's also not true. But there are certain things that we need to be aware of in that space. It's kind of a little bit of a case by case. But generally, if you've got a car loan or a credit card, like that's okay as long as you can afford to pay it and your financial, the things you need to pay for every week, fortnight, or month are still doable. So I think, that's probably another key one that we hear. Last one I'll just quickly mention. That I talked to a person this morning, single people. Lots of people say, oh, if I'm single, I can't buy a house. You definitely can. We do it all the time. So it's just about how your income and your expenses relate to each other. So definitely, again, a situation where you just have a conversation with someone around what you can afford.
Yeah, love that. Great myth busting there. And I will say, if anyone's keen for, I saw a little bit of chat in the comments as well about things like student loans, if they're a worry. For the most part, student loan is not a worry in terms of it's not seen as bad debt. It doesn't have interest on it and things like that. It's just a cost that they want to make sure that you can afford. And if people are wanting more on that, 2 weeks ago, the episode What the Bank Wants to Know Before It Approves Your Mortgage, talked to the lovely Chelsea from Kiwi Bank, and she ripped through some of this stuff for us. Great myth busting. She also had great nails, which is entirely beside the point, but I was admiring them the whole time.
Love it.
So that's another time where it's great to have the video up so you can see Chelsea's wonderful nails. But Claire, I think one of the things that pops up in the comment section here and just in general on this is there is a lot of that overwhelm where we see things like KiwiSaver rules changing. That is obviously, of course, huge for building up your deposit. So what do people need to know to be across their KiwiSaver in a way that works for their first home buying journey?
Firstly, to make sure that you're contributing. So a wee disclaimer here, so I'm not an investment advisor, so I can't give you KiwiSaver advice, but I can just share some of the things that we do and that we encourage our clients to do in terms of KiwiSaver. So working out what is achievable for you in terms of percentage contribution. So is it achievable for you to increase slightly to get some more funds put away in that KiwiSaver and hopefully, build that up over time? A couple of other things that we do is open a savings account with another bank. So it's really tempting when you're like out on a Saturday night or, you're out and you want to buy something to kind of reach across and transfer funds. So I always say if you put it into a different bank, it's a lot easier to manage. When it comes to overall deposit, we see a lot of people only using their KiwiSaver. They've diligently put money away over the years and definitely, and lots of them have increased their contributions over time. So when you get a pay rise, your expenses hopefully are not increasing with your pay rise. So if you can increase that contribution a little bit at that point, in order to kind of get to that 3 to 5 year period in KiwiSaver, that's a really good idea. Yeah, and then the other things are probably just, is there anything else you can do to put some funds away? So I know, Francis, you've covered before things like side hustles and lawn mowing and all of these sort of things that kind of can help get you into a position. We see a lot of young couples either live with their parents or live with friends, and that really helps them put away a lot more money as time goes on as well. And that then again, it's often to accelerate their position rather than get them there in the first place, to actually be able to build that up a little bit quicker. And often I say to people, hey, look, if you can add 10,000 or 15,000 or whatever it is, then it's going to get you into a position to buy by the end of the year, or within the next 6 months. And so that really gives people a goal to move towards. The other thing is probably there's a little bit of uncertainty about the government products as well. So the first home loan is, I think, an amazing thing. It
That's the
helps people
5% loan people can get, eh?
yeah, so from 5% deposit. And I will just explain it a little bit, because there's a bit of confusion around whether or not everybody should be looking to get a first home loan. So basically, the first home loan is a government guaranteed or a government backed loan. So essentially, it helps you get into your property with a lower deposit. So 5% is the starting point, up to 10%, anything less than 20%. When you get to 20%, you probably don't need the first home loan anymore. So that then you fall into a sort of what I'd call a standard bank product, and you're eligible for a whole lot of different sorts of benefits. So that's a common question I get. Everybody looks at the first home loan and says, that's what I do if I'm a first home buyer. But generally, if you have less than a 20% deposit, that will be where you'd kind of start from. In terms of the eligibility criteria, there are a few around. You have to be a New Zealand citizen, all those sorts of things, but also the income is probably the key one. So 150,000 joint income in the last 12 months. So this is something we see a lot. People who've been maybe on maternity leave, or they haven't actually earned as much maybe as they did in previous years. So that can actually sometimes kind of adjust their eligibility. So really important to look at what your IRD summary says there. The other thing with the first home loan is they are quite particular about being in your role for 12 months or more, and in the same industry. So there's a few little small bits and pieces there that you have to meet. And then there's a bit more information. So just be aware that you do have to get things like employee letters and additional bank statements and stuff like that when you're gathering up your application. But in a nutshell, it's an amazing, amazing product. Probably the last thing about the first home loan is that there is something called lender's mortgage insurance, which is a small amount that you pay when you take the loan out. And that is changing a little bit after the 1st of July. So if you've got a first home loan application in at the moment and it's approved, you should be eligible under the old criteria, which is at 0.5% of your total loan amount. And then it's increasing to 1.2%, which is super random. I'm not quite sure where they got 1.2% from, but that's from the 1st of July. So just something to be mindful of if you're like in the process of buying at the moment. But generally, the LMI is paid as a part of your loan, so you're not going to need to fork out that money. It's part of the overall loan. So yeah, hopefully that covers a little bit of the first home products. Probably the only other thing is the first home grant, which doesn't exist anymore.
I know. I'm so bummed about the first home grant. I used
Yeah.
that for my first home. It was so helpful. It really, helped get me over the line, and now it's gone. But
Same.
what do we do? These things change, and I guess we just are glad that we have them when we do, and when we don't, we find other ways. Super quick, Claire, because I have a couple of questions that I want to hit Vanessa with, but this one came up in the chat and I think it's relevant to what you were just saying. So I just want to ping it your way really fast. Steph asking, my partner's job is in hospitality. I am in accounting. Will a bank look at my partner's employment history and question his reliability? Does your choice of career matter?
Oh, that's such a good question. No, in essence, it doesn't. So probably the only situation where it would impact, and it probably depends a little bit if it's going to be first home loan or not, but in a nutshell, choice of career as a whole shouldn't make a difference. It's probably about the demonstration of how long he's worked for. So for example, if he works for Mexico, and he's been doing that for 18 months, awesome, cool. And the bank would just generally average out how many hours he does. So a lot of hospitality workers can vary hours. So that's probably the thing that you'd want to cover and go, cool, he does a minimum of 38 hours a week or 45 hours a week. And then the employer letter perhaps would just confirm that. So the actual choice of career as a whole is fine. It's probably just around the hours and the length of time that he's been in his current role that would impact your ability to borrow. But again, if you'd like more specifics, just reach out.
Perfect. And I always think one of the best ways to understand banks, they're very conservative institutions, right? And for good reason. There are so many rules on them. They absolutely cannot break those rules. And I always say, think of your bank like, slightly judgmental parents, They're mostly concerned that you have a job, that you turn up reliably, and that you always pay your bills reliably. The type of job isn't necessarily such a big deal, right?
Totally. Yeah, absolutely. And banks are always looking at risk. So that's their whole job when they're looking at your loan application. So they're looking at effectively a matrix of risk, debt, income, expenses, deposit, etc. So how much risk are they taking and lending to you? And it's just about working out which things we make the most of and which things we what we call mitigate. So hey, he's been in his role for 12 months and he's had a pay rise and he's doing more hours. All of those things are mitigants and improvements. So yeah, just really important to understand the situation and get someone to advocate for you.
Yeah. Now, Vanessa, I want to run something by you that I hear a lot. I hear a lot of people saying, well, it's really especially hard for first home buyers because they're at that cheaper end of the market. And that's also where investors like to hunt, that there is competition for those bargain properties. First of all, do you think that's true? Secondly, is there a way to sort of try and balance that out, reduce competition?
Yeah, it can be a bit of a challenging position to be in because you are right. It's more that cost-effective end of the market. But what you've got to remember is that first home buyers are typically buying because they want to be in that house, and that means a lot to them. Now, I know we always say on this podcast, buy with your head, not with your heart. That's even harder when you're a first home buyer because, this is just the excitement around it all and you can visualize your life and what could be from this. So I totally get it. So let's just be realistic about it, is that you are also buying more with your head, a little bit with your heart. Whereas when you are coming up against investors, they're pretty much always head only. So they're only going to be looking in markets where they can purchase a property for a certain amount of money. They know they'll get a certain amount of rent within that area. It's probably in a certain proximity to like public transport or areas in which they can get reliable tenants that perhaps might not need a car or want a car. So when you are looking at what do investors look at, you could also do kind of some maths in your head and go, well, actually, in this area, as an example, the prices might be quite cost effective, but actually the rent's not that high here. So, it's sort of, some of those things you can look at, you could be like, well, actually, both of us have got cars and both of us work from home. So we actually don't need to be near a train station at the moment. So actually, this wouldn't be as desirable for an investor as it is for a first home buyer. So just looking at those things that an investor might be looking into, doing some quick maths in your mind around whether this particular property that you're after. But look, as I said, it's purely head-based for an investor, whereas you can have a little sprinkling of heart if you are, we'll let you, just a little bit though, not too much, when you are a first home buyer and thinking through those things as well. And to Claire's point, if you've got that extra $10,000 or $15,000, that might just be the amount that will get you over the line versus an investor who's gone, no, I'm just going to do a flat 500. It makes no sense to me after that. And if you can go to 510, well, then the property's yours, providing the vendor wants to sell it to you, of course. But yeah, so Claire is right on some of those points. Just even a small amount can be the difference because you only need $1 more than the lowest offer. You got to remember that. So people say, can you bid $1 at our auction? You absolutely can. It's not the ideal increment to increase house auctions by. But look, as long as you're $1 over, the house can be yours. So, every little bit does count.
And I think that is the thing, is if you can take the time, if you're in one of those areas where it is a bit tougher, say you're in Auckland or Queenstown, even Christchurch seems to be booming recently.
Ooh.
If you're in one of those areas where it's a bit tougher, is you might have to do a little bit of research on, okay, I'm not investing, but what do investors look for to make sure I'm not doing that? And it you don't have to go and get yourself, fully certified as if you were going to fully become an investor. Just a little bit of research into what they tend to look for, and that can help guide some of the search. On the flip side, of course, some first home buyers do turn investor themselves. There's this rent vesting strategy, which I've actually got something in the works on that for those who are interested. Do make sure you hit subscribe because I've got a really interesting interview coming on that one. But it's the idea of you rent where you need to work. So maybe that would be a more expensive city like Auckland. And then you try to buy somewhere else that's cheaper and you rent that property out yourself. Gets you onto the property ladder, makes sure that you're not, losing money hand over fist, we hope, balances out some of those costs, and can help get you sort of in the game. What do you think, Vanessa? Pros and cons of that strategy?
Yeah, hello, my name's Vanessa and I'm a rent investor. My first property was not one that I lived in, so here you go.
Love it.
I can speak from experience. Look, I think one of the biggest cons with that is that unless the rules have changed, and Claire's probably going to know more about this than me, but I don't believe you can use your KiwiSaver as a deposit if it is an investment property. So be quite mindful about that. The other thing would be the amount of deposit. So depending on what type of house you are buying, as to whether you'll need 10 or 10, 20, or even up to 40% of a deposit. And that would be the difference between buying an existing dwelling or an existing house that already exists versus a new build or a house that's no older than 2 years old. So it's good to really understand those. But look, I was in this exact position. I live and I work in Auckland and I just could not afford, and I bought by myself as well. I just could not afford a house in Auckland. It just wasn't going to happen unless I wanted sort of a 2-hour commute, which I was sort of thinking, you know what, that's just not where I'm at in my life.
No, thank you.
Thank you.
I don't know how good the podcast is. I don't want to commute that long.
No, and also it's 3 hours when it rains, right? What is it with working out how to drive when it rains? I'm like, oh my goodness. So I decided, no, I'm not going to do that. And so I ended up buying in the Hawke's Bay. And again, the house prices were probably a quarter, if not a third, maybe a quarter of where I was living. And then I worked out, well, if I buy this house and I rent it out for a certain amount and I'm paying rent in Auckland, what does that all look like for me? And it actually worked out, including my rates and my insurance and all the rest of it. Got some advice around all of that. But what that meant for me was that effectively my rent was just increasing by $200 a week. And I went, can I then increase my expenses by $200 a week while in the meantime I'm purchasing a property, I'm getting onto the ladder, and I'm over time will be able to pay that off and the market moves and all the rest of it. So I think looking at get some financial advice around what it means for you and your deposit and the type of house you're looking to buy in which area that you are not living in. But really, again, once you do that modeling, sometimes people can be very surprised at what they can actually achieve, and it's a really nice way to get onto the ladder.
I'd love to know as well, seeing as you've actually been through this and you've done this, I'd love to know a little bit more of the sort of the personal journey there, if you don't mind sharing. Only share as much as you want, of course. But I think there's often a somewhat emotional side to it when you are still renting yourself that can feel different, and then also having to gear up to rent out a house to someone else and to do it well. You don't want to do a bad job of that. It's a big asset that you now have someone else living in. So what was that like as you started that rent vesting journey? Was there anything that caught you unawares or felt a bit funny, anything like that?
Those are great questions. I probably went through the journey of wanting to buy a house so bad that for me it didn't really matter how it transpired. So I wasn't really attached too much to, I feel like I've not maybe have failed if I'm still renting, or I didn't really feel that, or this is mine and so therefore I should live in it. I didn't really have those feelings. I just knew that I had myself a goal that I really wanted to own property before I was 30, and I was like really stuck on that. And I did an OE, and that cost me a lot of money. I mean, I don't regret any of it, but it was an expensive, thing to do in your 20s. And then I came home and I just wanted to buy property so bad that to me was something that I sort of had let go of, this I can still rent while still purchasing a property. I agree with you. I think having someone else live in one of the biggest things you're ever going to buy is really nerve-wracking. But again, I would say get your experts involved. We used a local property manager. At the time, I couldn't also afford for it to be property managed on an ongoing basis, but a lot of property managers will offer you a service where they'll help find the tenant for you. So you pay a fee for the tenant to find the tenant. And I thought that was a really great service. So I went down that route because, again, I was new to all of this. I think probably the most surprising thing for me was how average going unconditional felt. I don't know what I thought was going to happen, but I was like, there's an email that turns up, it's like, congratulations, you've gone unconditional. And I was like, oh.
You're waiting for like confetti and balloons and champagne, and you're like, oh, life's just continuing. What?
Yeah, there's no keys. There's kind of like just an email from your lawyer. And I don't know why, but in my mind, there's a lot of talk around, unconditional. What does unconditional mean? And, and I don't know, I just, in my mind, I talked it up to myself around how fantastic going unconditional would be. But basically all that means is that you get an email from your lawyer, which says, you're in. You've both agreed on the same day. There's sort of no other, you can back out, but it'll cost you a heck of a lot of money. So no recommendations on that. And it's kind of like, it is yours. You don't get the keys yet. That's the settlement date. That's the day that was really exciting and hideously nerve-wracking when you check that banking app and see how many hundreds of thousands of dollars you're in negative. Whew. But that's the day that the keys are in your hand and you can walk through that door. And it was such a special moment for me walking through the door of that house and going, this is mine. I mean, lots of it was the bank's, but this was mine. So I think that's probably what really surprised me. Is like unconditional seemed like this really magical thing, and it was just an email from the lawyer. But as I said, I was just so. My goal was just to get a property. I thought in my mind that it was going to be my property that I was going to live in. But when I had got to almost 30 and went, you know what, that's not going to work. Okay, how else can I think about this? And that's sort of how that answer came about.
And then was it basically a question of paying it off, building up that equity? Do you live in a house that you own now? Is that sort of how you did it? And walk me through just briefly where the process goes after you start rent vesting.
Yeah, so I did have a big focus on paying that particular mortgage down. I probably would have got more financial advice if I could rewind my life and do it a bit differently now, just because I understand that when you pay down a rental property, an investment property, I won't go, let's not go into accounting here, shall we?
Yeah, let's keep a high-level overview.
A high-level view, but I did spend most of the next 5 years paying off that mortgage, and at the same time, the property market was moving. And so I not only got the debt level down, but I also grew some equity in the property because of the market that moved in that time. And then that allowed us to get into our house in Auckland. So yes, we do own in Auckland as well, and have another investment property, which is something that I'm super proud of. And all sort of happened, within a sort of a 10-year period as well, which is really cool. Again, some of this stuff, if you had asked me 10 years ago, it'd be like, oh, that just seems impossible. And now here you are 10 years later, 10 years older. But, it's, starting that and having that goal in mind of this, what I want to do. While it didn't happen the way that I thought it would happen, it was awesome that I found another way around it. And it still meant that I could kind of live out that dream.
Oh, 100%. What is the old saying? It's something along the lines of people overestimate what they can achieve in a year, underestimate what they can achieve in 5. And I have found that over and over again. If you told me 5 years ago that I'd be in the financial position I'm in now, even though at that point I was starting my money journey, I would have just never thought it. It's amazing how you start to put into place things that feel little and they feel like compromises, and it feels like, that's not quite where I want to be, but I suppose it's fine. You can build off that so much more, and it does snowball faster than you think. I mean, Claire, speaking of some of the creative tactics here, I mean, one thing people do, it's a classic, pull resources to someone else. And often we see that in terms of a romantic partner, boyfriend, girlfriend, husband, wife, whatever. But it can also be siblings, it can be friends, it can be other family members. What are pros and cons there? And is there ever a time when you shouldn't?
Yeah, such a good question. I have this a lot because, a little bit like what Vanessa was saying before, when people are, say, on a single income in a particular location, they just kind of can't get into where they want to do. So the other option, so that they can use their KiwiSaver and have that sort of 20% deposit, is often to kind of join forces with someone else. So I've seen a lot with siblings, with cousins, and also with really good friends. So a couple of things that I would recommend. So firstly, that you have effectively a relationship property or a property sharing agreement. So that's a legal document that says what everybody's going to do. So the key thing there is, how much money did everyone put in? And then how much are they going to pay off the mortgage? So that's usually 50-50. So if you can do 50-50, that's great. And then also look at, what is that outcome going to be at the other end? So is this going to be for 3 years? Is it going to be for 5 years? And what happens if someone wants out? And then what happens for the person who might come in? So I'll give you an example. I've got a friend who is a solicitor. She bought her ex-husband out of their house, and then she bought with her brother, and now her brother wants to go and buy by himself. So there's quite a lot going on there. But the key thing is, because she's a lawyer, she had a really good property sharing agreement around what everybody was going to pay and what everybody put in. And it just meant that it's been really simple at the other end. So there is no detail that is like too much detail in a property sharing agreement and an agreement between you. So you'd ideally want to get legal advice for both parties in that situation. The other thing that I have seen a bit is a little bit of a combo on the rent vesting, and funnily enough, also the Hawke's Bay. I had a couple of sisters, so they purchased together. One lived in Hamilton and one lived in the Hawke's Bay, and so effectively for one of them it was an investment property, but for the other one it was a owner-occupied property. That didn't matter so much from a bank perspective, but it was around ensuring everybody's expenses would line up. But that's possible too. It just requires a little bit of planning. So there's so many options, and I think probably people do tend to go towards family, because your family's always going to be there for you. But I've seen this work super well with friends. I've got a couple of friends in Cambridge who bought together, and again, I think it's just about being really clear on expectations. So that doesn't work for everybody, because some people want a little bit more control than that. So your personality is probably quite important. But yeah, having that agreement is really key. And also just agreeing on what's fair in terms of the outcome. So particularly if you've got someone who's got a higher deposit to begin with, and then how are you going to sort of split up the lending? So if you had, say, 60-40 in deposit or something, is it going to be that one person owns 60% and they also take on a little bit more of the debt, or are you just putting in the deposit and then splitting everything 50-50? So those are probably two things that you'd want to be quite clear on when you come together. So but yeah, very creative. And I think, gosh, it's helped so many people do exactly what Vanessa did, which is to get onto the ladder and then be able to maybe at some point come in with a partner and buy a property to live in, or a home eventually. So there's lots of options there. And I think a lot of the time, like, it's just those barbecue conversations, like, I'm looking for a property, oh gosh, so am I, oh man, maybe if we pull resources, we can, not with a random, of course, but but with a friend, and I think people kind of get a little bit scared of the friends thing. But yeah, property sharing agreement, it's a great idea if you can. But yeah, I'd say money personality is really important there. So any situation where you shouldn't do it, is probably if your money personalities don't kind of connect. So if one person's a real spender and one person's a real saver, it's probably going to be a little bit harder. But otherwise, just have a really good agreement. It's really key.
Yeah, like you say, get in that room with a lawyer. And I know people are often scared of lawyers. They're worried it's going to cost a lot. And for starters, I will say in a lot of these situations, the lawyers have dealt with it all before. They have a template that they're going to run you through, and that means it's not that expensive. It's the same with, I went through something with wills the other day, and I think the most expensive for a will was something like $500, which, yeah, okay, that's still a lot of money, but it's not earth shattering, and it saves you a lot more at the end of the day. Similar thing with this is it might be a couple of $100, but it's so worth it. That could save you thousands, and it's going to prompt you to have these conversations where you're just testing everyone's expectations and what's going forward. I think it can work really well as long as you are on the same page. Now, we are running up on time. I did see a bit of chat in the comments about self-employed and what the rules are there. So I'm just going to point you to, again, the episode from 2 weeks ago, what the bank wants to know before it approves your mortgage. And that one, we spent quite a bit of time diving into what they think of self-employed. And I know a lot of the times they talk about this 2-year track history. You can get around that with things like forecasting and letting them know what contracts you do have locked in. So please, again, don't feel like these rules of thumb have to be applied in every single situation. You can actually work around it. Check out that episode. Myself and Chelsea went into that quite a bit. Vanessa, I'd just like to sort of round off with you a bit. I mean, overall tip for first home buyers, is there sort of a main thing you want them to know?
I actually reached out to our team because we've got some amazing first home buyers at our team here at realestate.co.nz, and the key piece was, well, I've got two and I'll go really quickly, but location, location, location. You cannot change the location of your house, but you can change the house. So just remember that when you walk in and it's not your dream home, it could be your dream home, but you don't want that 3-hour commute when it's raining in Auckland. And the second other piece of advice, which I think is super helpful, work with a fixed fee lawyer when you are doing a property deal. If there is, it's very simple to get, just, call up the lawyer and say, look, what is your fee to do this? And call 5. It costs you nothing to call them at that point. But quite often they will have a fixed fee when they're doing a property deal. And I totally recommend that.
Oh, I love that. That's brilliant. What about you, Claire? Is there something that you wish more people knew, a top tip that you would say for most first home buyers?
I think it would hark back to what I said earlier, which is know where you want to go and then know exactly what you need to do to get there. So talk to someone about where you're at the moment and take the action required, because I think fear of the unknown holds a lot of people back, and also fear of what the bank might say or what someone might feed back to them. At least if you know, then you can take some action to change it. So that would be probably my big tip.
100% agree on that. And then in terms of that, so we've got a whole bunch of knowledge. Now in terms of sending people back out into the world with some action points. Vanessa, this is one of the reasons that we bring you on, because realestate.co.nz, you've got some fantastic tools that do actually help people a lot. So if people are wanting to go and start sifting through the market, are there some tools that can help them on there that they should be keeping an eye out on?
Absolutely. I always recommend going to Save a Search in your local area, because you will be able to see what type of properties are coming onto the market instantly the moment they are listed. There is plenty of data up in our for sellers section at the top of our website, and our news section. The property report comes in every month. Or if you want to create an account at realestate.co.nz, just log in, create an account, and we'll send you the data every month in your inbox. So you choose how you want it, but there is plenty out there. And I always say this isn't on our site, but just go and visit some open homes, ask the real estate agents loads of questions, because real-time data on the ground is also super helpful.
Love it. Excellent. All right. And Claire, I know that we mentioned your book earlier. So for starters, I didn't say the title of your book. Please tell us the title of your book for anyone who is interested in it, and also where they can get more info from you, because you put out some stunning amounts of info.
Oh, thank you. It's called Smash Davo to Smash Goals, the fun and easy way to buy your first home. It's available on our website, mymortgage.co.nz/shop. You can buy it there, or you can reach out to me, connect with me on LinkedIn, or any of the My Mortgage accounts across socials. And probably our YouTube page is quite a good place to go if you'd like some information about some of the specifics of the situations that we've talked about today. We do quite nichey little videos of us just explaining the process. So if you jump on there, you'll find a wealth of info.
Love it. And now, in terms of people who are getting that book for free, I've seen a lot happening in the chat. Thank you so much to everyone who's been contributing, keeping the chat really lively. It was actually really hard for me to pick 3. So please, if I didn't pick you, come around next time and maybe you'll get the next wee freebie we put out. But I'm thinking Olivia, Matt, and I'm not sure how to say this. Is it Penhalagon? But those 3 accounts, I've seen you guys heaps in the chat, so you are getting a copy of Claire's book. Hit reply on the email that you got sent out reminding you about this webinar. That should get you straight into my inbox and say, hey, it's me, I won the book. And then I can get your address off you in a sneaky manner where you're not broadcasting it to the whole internet. All right. Hey, that's all we have time for. Thank you so much, Claire Williamson and Vanessa Williams. They have, of course, given us so much to think about. If you still need more, send us those questions. Listen back to past episodes of Making Sense, and we can always bring them back for more. So hit subscribe so that you always get good info on this. Send it to a friend if they're in their first home buying journey too. We can always do a little better together. Until next time, have a great day, team.